Hello, good day. Today I will present my analytics on the stock markets. I will go into Nasdaq and China Internet ETF, which comprises a high weightage of companies such as Tencent, Alibaba, etc. I will also revisit stock I had analyzed before such as Amazon. On May 1st video, I had made a comparison between Amazon, Alibaba, and Sea. After monitoring for a while, I had also taken a position in Alibaba. On July 27th, I had also made a video that federal interest will probably hike interest up to 6% by in 2023 versus market news reported that the federal will stop interest hike or cut interest hike. As I am starting my journey to be a better trader, please support and subscribe and like my video so that you can get my latest update on market analytics as alternate voice to market direction. Your subscription will be motivation for me to continue this journey. Let's go. For QQQ, it has touched the support level and rebound. As we are going into volatile week where Fed may raise interest, therefore, we will need to watch out whether the support level will hold. Hence, it is not a good time to take up big position. I had taken a small position in one US-based stock and one US-based commodity stock. Next on China Internet ETF, it has maintained steadily in a near straight line. Such a formation means that there is support from an invisible hand, e.g. institutional, government, etc. Recently, we are seeing a fair amount of good news to support the market as major bank lower rates, cut reserve to bolster the economies, etc. Although, it had yet been reflected in stock price, but this should not be seen that there is no effect in the market, it just been that it will take more time. Taking a lot into the KWEB, it will be directly impacted by these actions. For Coinbase, I am taking a small position after my previous buy and sell position on July 4th. As for Amazon, it probably will maintain within the third box position before it starts its next price action. I am okay for Amazon position, however, because of my trading style, I am looking for Amazon similar stock in their early stage to get in so that can get higher return when it surge. For this week instant noodle dividend from option, I got around $372, which come 2/3 comes from Alibaba and Neo, and rest are short-term trading position in stocks that I am observing. For Neo trading plan, I am executing based on my last week analytics, and I will have another position pending Neo to expire worthless coming Friday. In summary, I am expecting volatile swing coming week as we are going into federal meeting on 19 and AMP, September 20th. Let's me play the previous communication by Federal Reserve Chairman Jerome Powell.
We haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same questions. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit, and the June CPI report actually came in a bit better than expectations for a change. And the June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path as it will be consistent with the CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture, and starting with we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance, including in particular in the labor market. We'll be looking at inflation. We'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting.
Next, I will continue to do instant noodle dividend play by selling both call and put options on my medium-term holding to get income while the stocks make its next move. Finally, investing in different types of assets, industries, and regions, you can lower the impact of any single investment on your overall portfolio performance. This way, you can avoid losing a large portion of your wealth due to unforeseen events or market downturns that affect a specific sector or asset class. For example, if you invest only in Singapore stocks, you might miss out on the opportunities offered by China markets or US companies that have higher growth rates or competitive advantages. However, if you also invest in foreign stocks or funds that invest in foreign markets, you can benefit from the diversification and growth prospects of these markets. Moreover, by diversifying your portfolio, you can also reduce the volatility or fluctuations of your portfolio returns. I will post the past video mentioned in the end screen for your consideration. In order to get my latest analysis on stocks, please do like, share and subscribe so that I can share with you on my trade preparation and journey. Brace for a volatile week and thank you.